Good morning. Thank you for joining us on today's webinar on long-term care insurance basics. We've got Andy out of our Seattle office today. He's going to be joining us to talk a little bit about long-term care, why you should consider it, why you shouldn't, as he will talk about through the presentation. Obviously, we don't do long-term care. This is just one component of working with you and your insurance agent to help figure out what your full wealth management picture looks like. And this is just one of a series of webinars that we have done on similar subjects. Andy, are you available?
Yeah, I'm here.
Excellent, sir. Looking forward to hearing about long-term care.
Great. Thanks, Matt. As Matt mentioned, I'm Andy Frey, a Vice President with Cutler here in the Seattle area. Couldn't have done a better intro myself, but today I'll be talking about some basics around long-term care insurance, just to provide some more information to our audience about this as part of their overall financial plan. As Matt said, I am not a licensed insurance professional, nor are we at Cutler, nor do we claim to have an extensive knowledge of long-term care insurance or other insurance products. So what I'll talk about is just a basic discussion of long-term care insurance, and I'd encourage each of you to contact an insurance professional for more information about your particular situation if you have specific questions. So what is long-term care insurance? Just a basic definition I found from Investopedia that I think encapsulates it nicely. It's coverage that provides nursing home care, home health care, personal or adult daycare for individuals above the age of 65 or with a chronic or disabling condition that needs constant supervision. So the services and the terms will vary based on your particular long-term care insurance policy, but that's a fairly general definition of the purpose and design of long-term care insurance. And sort of the way it works is a benefit is paid out typically as a predetermined rate per day for a set number of years after a waiting or elimination period. So things, for example, like a higher daily rate or a longer benefit period or a shorter waiting or elimination period are all factors that might increase the premium cost on a long-term care insurance policy. And it's important for all of you to know that your regular health insurance likely does not cover long-term care related medical expenses. So it's an insurance policy specifically designed for care later in life. What are some of the considerations that you all should be thinking about in terms of long-term care insurance as you go throughout the rest of your life? The first thing is your lifestyle, and it may sound a little bit backwards, but basically the healthier you are, the more you may need long-term care because chances are you will have a longer life and may need that care down the road. Your family health history also plays into this in terms of longevity consideration, proneness to illness or disease. You may have heard about a study recently talking about that lifestyle has a significantly higher impact than family health history in terms of longevity. However, I would encourage you sort of consider both as you evaluate this for your own needs. And then thinking about the kind of level of care that you want or need in the future. How do you want to live your life in the later years? Do you want to be in a home? Do you want to live with your kids? Do you want to stay in your own home? So really thinking about how you want to live your life on your terms in those later years can help you determine whether or not a policy is the right thing for you. And lastly, can you afford it or can you afford not to have it? So understanding what your premiums look like, knowing that those premiums may change over time if you do have a policy, or simply looking at your own income and assets and determining if you can self-fund long-term care needs in the future through savings, or on the other hand, potentially being protected via Medicaid if your assets are depleted later in life. So I want to take a minute to look at some statistics around the unpredictability of long-term care. It's difficult to estimate who's going to need it and how many people are going to need it, but this is some good data to kind of give you a sense of what the AARP, at least in this example, is talking about today. So for folks aged 65 and over that do need some sort of long-term care, about half of them need it for 1 year or less. And about 13% need it for 5 years or longer. So most only need some sort of long-term care for about a year or less. Your geographic location and where you want to live will also impact sort of the costs of long-term care. As you look at the United States, Connecticut is the most expensive in the contiguous U.S. at about $150,000 per year. And Texas is one of the cheapest, about $55,000 per year. But on average in the U.S., you'd be looking around $86,000 per year. And this is for nursing home care specifically, which equates to a little bit over $7,000 per month. So pretty high in terms of the cost of continual nursing home care as of today. And if you look at the total population, 65 and older, the Department of Health and Human Resources estimates that up to 63% may never even have any out-of-pocket spending on long-term care. However, as you see, about 10% of the population may spend $250,000 or more on this sensitive area. So it can be quite impactful to your overall finances and savings. Looking for some additional context as to what certain types of care might cost. This is from a 2016 Genworth survey, looking at kind of the major options out there for long-term care. Things like home health aid, homemaker services, or an assisted living facility are all going to be priced, relatively around the same level. Likely somewhere between $40,000 and $50,000 per year, again, contingent on your location as well. Adult day health care, which is essentially exactly what it sounds like, a place for daytime supervision for adults that need that, will be a bit cheaper. And then on the far right, you see your nursing home care. Again, pretty expensive. You're looking at upwards of $7,000 or more per month. About twice the cost of the other major options available out there. So having an understanding about what type of situation, facility, arrangement is best for you is very important because you can see the swings in pricing here, and especially for nursing home care, the very high costs if you do end up needing that down the road. So how does a policy work? How do you trigger your benefits? How do you collect? What's the process? As I just mentioned, it all triggers on that kind of benefit thing where you are unable to perform 2 of 6 activities of daily living. Most plans are pretty consistent throughout what these activities of daily living are, and nearly all of them are similar in the sense that you have to be unable to perform 2 of those. And those are dressing, bathing, eating, continence, transferring to a toilet, and transferring to a wheelchair. Alternatively, suffering from a severe cognitive impairment may also trigger your long-term care benefits. But however, just because you've triggered the benefits doesn't mean that you get paid through the insurance policy right away. Nearly every policy will have a waiting period or elimination period, as I mentioned previously. And they're typically 30, 60, or 90 days in length from the triggering event. So that becomes very important because you need to have a plan in place for what you're going to do for that 30, 60, 90-day period until your benefits actually kick in. So chances are you'll be funding out of pocket during that time until your payments begin. Lastly, read the fine print on all of these insurance policies. And I'll talk a little bit more about that in a couple of minutes, but understanding how the policy works, what triggers benefits, what doesn't, what your waiting period is, how that can change, and understanding what might violate the terms of your long-term care insurance coverage. An example I came across in my research talked about a gentleman who had checked himself out of a hospital against his doctor's orders, and his long-term care insurance coverage considered that a violation and voided all future benefits that would have been owed to the individual with the policy. So understanding what's in your policy and what's in the fine print is extremely important because, as you'll see in a moment, these plans are not necessarily cheap. And while it's difficult to give you an estimate on what a long-term care insurance policy is going to cost because it's all contingent on your age and your health condition at the time you apply for coverage, much like a life insurance application and premiums, the consensus out there seems to be that the best time to do it is by or in your mid-50s. So it's the best sort of application range and ability to health qualify. And looking back at 2010, the reason why is 23% of applicants in their 60s were just denied coverage, and 14% of applicants in their 50s were declined coverage as well, meaning they could not qualify to even purchase a long-term care insurance policy. So as you get older, it becomes more prohibitive and more expensive for you. And I was able to find, I think, a pretty good example of what an individual with preferred health, so this means that you are in sort of above average health relative to your peers or to everyone out there. An individual aged 55 could expect to pay $1,300 to about $2,600 a year in premiums. A couple at age 55, again, both in preferred health, would pay somewhere between $2,100 and $4,000 a year in premiums. And then the big jump up to a couple at age 60, you see they pay somewhere around $2,600 to about $5,000 a year in premiums. So they get more expensive the older that you get. And again, there's no guarantee that your premiums will remain level over time. As we've seen now over the last several years, premiums have been going up pretty significantly, even for those that already have a plan in place. And again, things like that shorter waiting or elimination period, or a longer benefit coverage period, or a higher dollar amount per day will all increase the premiums that you pay. And most plans don't account for the rising costs of healthcare or inflation. So adding something like an inflation rider to your plan will also increase the cost of your premiums. So understanding this is a pretty big outlay is important as you evaluate whether or not it's the right decision for you, excuse me. So why would you do it? Why would you put one of these plans in place? The biggest reason is probably peace of mind. If you're a worrier, if you're anxious, if it just flat out helps you sleep at night, and you feel you can afford the premiums as part of your plan, go for it. Get the plan, have it in place, because if you use it, it will end up having been worth it. Now, if you're confident that you're going to use it based on perhaps your future lifestyle desires or family history or other concerns, from the statistics we've seen, absolutely worth it, because the cost will add up over time if you do need extended long-term care. And again, remember, the American Association for Long-Term Care Insurance says that 68% of people age 65 and older will require some form of long-term care. So consistent with the stats we looked at earlier, but now know that rates increase on average in your 60s about 6 to 8% per year. So again, the earlier you do this, the better, because it's only going to get more expensive. So that'll lead me to some of the problems with long-term care insurance policies. And I'll start with sort of looking at the history of these. They really kind of came about in the 1980s and gained a lot of popularity in the 1990s and early 2000s. And now there's been a history of premium spikes and insurer losses. What happened essentially is that insurance companies grossly underestimated the cost of healthcare later in life. And as a result, most of these have faced significant losses due to benefits they've paid out on previously issued long-term care insurance policies. And especially coming out of the financial crisis of 2008, the artificially low level of interest rates in the economy made it so that insurers were unable to earn a commensurate investment return on their portfolios in order to fund the claims against these long-term care policies. So there's no guarantee that your premiums will remain the same. Most have been rising, again, even if you already have a plan in place. So read the fine print on how the pricing works. And many purchasers in the 90s and 2000s continue to face rate increases today. As a result of that, you saw well over 100 insurance companies issuing long-term care policies in the 1990s, and today there are fewer than a dozen. So your options are limited in terms of who will write these policies, and they've declined by nearly 90% since the 1990s. As well, new issues of long-term care policies are at 25-year lows. They're down 87% on an annual basis from 2002 to 2016. And that's because that the premiums have become prohibitively expensive for a lot of the population. And again, based on your health condition and age when applying. So know that your current condition, your age will impact what it's going to cost, and that there's no guarantee that your premiums will remain the same over time. Lastly, your benefits may not be deployed in time or triggered at all. So remember that elimination period I've been talking about, and remember that you might do something that violates the terms of your coverage that could void any benefits due to you. So again, you have to understand what you're getting into with these policies. A couple more issues. If you have any pre-existing condition, you can kiss a plan like this goodbye. You're not going to qualify. So MS, Parkinson's, cancer, dementia, cognitive dysfunction, anything like that that's a pre-existing condition, you will not qualify for long-term care coverage most likely. One of the more startling things I found was a quote from the CEO of Genworth Financial in talking about long-term care insurance policies and how they were originally structured and built and sold to the public. He said, "We never should have done it, and the regulators never should have allowed it." Genworth, for reference, had about $2 billion of losses they suffered on issued long-term care insurance policies. And as a result, the company had to sell itself to a Chinese conglomerate to get out of trouble. So they got in over their head issuing policies that they could not afford to then pay the benefits on. So that leads me to the next sort of big problem that's been going on recently, and that's benefit reductions. Older policies already in place have changed, not only in terms of the premiums paid, but the actual benefit obligation that the insurer owes to the insured based on the original terms of coverage. There was a very good article in the Wall Street Journal that you'll see in the link if you go to the slides after the presentation that showed some of the impacts that these have had on people that have bought previously issued long-term care insurance policies. One particular example was a couple that bought a plan from Penn Treaty that originally issued was guaranteed as lifetime benefits with no dollar cap to the amount of benefits paid. That couple has now been told that their lifetime benefit will be capped at $300,000. So they've been paying these premiums for many years with rising premiums, and now they're being told that their benefit will be significantly lower than what they thought it would be at the onset. So this is a common theme right now in that a lot of these insurers are going to be unable to fulfill the obligations of existing long-term care insurance policies. So again, you have to understand the fine print, know what you're getting into, and know that in the past, some of these policies have changed. So given those cons, if long-term care isn't the right thing for you, what are some alternatives that are out there? The first one, and probably the one I would favor the most, is short-term care insurance, which essentially works the same way, but it's coverage for up to 1 year at your own home or in a facility. So as we saw, about half the population that's going to need some form of long-term care will use it for a year or less. And these plans have lower premiums as a result and an easier medical exam. You're more likely to qualify for short-term care insurance coverage. A next alternative is hybrid life insurance long-term care policies. And these have increased in popularity a bit over the last few years. And essentially the way it works is you can tap early the death benefit of a life insurance policy to pay for long-term care. And if you do not use that for long-term care in your lifetime, when you pass, the death benefit is still intact and passed on to your heirs. However, these have significantly higher premiums than even long-term care policies themselves, again, because of that life insurance component added into it, but your premiums are more likely to be fixed than with a regular long-term care insurance policy. The third way to think about funding this without long-term care insurance is through self-funding. In other words, using your existing income and assets to pay for an event that may occur down the road. So this is where understanding your future cash flows and planning becomes very important to think about whether or not you can afford a scenario where you may have long-term care in the future. Again, I'd encourage you to overestimate on these things, and as we showed previously, costs can run up to $7,000 a month depending on the type of care that you need. So should you buy long-term care insurance? I'm going to go through three scenarios to kind of give you some context here. A very high level of wealth. I'm not going to put a dollar amount on that because we all view that a little bit differently. But if you are very comfortable in terms of your standard of living, spending, you could go either way. You can self-fund a plan if you do not have long-term care. In other words, you can pay for it out of your own savings and assets. Or if it gives you the peace of mind that I talked about earlier, pay the premiums. If it's insignificant to your net worth, to your overall income level, you can go ahead and pay the premiums and know that you have the comfort of having that plan in place. A very low level of wealth, this plan probably does not make sense for you. The premiums are too expensive and too prohibitive to a lower level of income or lower level of savings and investments. So chances are that Medicaid will cover you after your resources are exhausted. And now for most of us that are on this call today, and most of us out there, if you're somewhere in between those levels, it's going to be situational dependent, and you have to do your homework. You have to think about all the things I talked about previously and understand whether or not it's worth it for you to pay expensive premiums on a long-term care insurance policy, or if you would rather try to self-fund a plan or go a different route. As a sort of a closing comment, I'm going to leave you with a great quote I found from a certified financial planner who specializes in long-term care insurance. For those neither wealthy nor least well off, I generally recommend against long-term care insurance. The main reason to buy would be to protect some inheritance for heirs, and that's not the main purpose of the portfolio. Because long-term care policies guaranteeing fixed payment no longer exist, the risk of continued huge rate increases after 5 to 10 years is too great. I would tend to agree with this gentleman on his thoughts on long-term care insurance. However, again, it's going to be up to you to understand what you need later in life, to seek the opinion of a professional in the insurance space, and to contact us at Cutler to help you think about this in the context of your particular financial plan. So with that, I'd like to thank all of you for your time today. And if you have any questions, please reach out to your advisor or contact at Cutler. Thank you.
Andy, thank you for your thoughts. This will be posted to the website. If you wish to share it with friends or family, it will be up later today or tomorrow. Thank you again for joining us, and have a great rest of the day.